attention. And of course, there are other names, which is the entire PSU space. Metal stocks, for example, have been seeing a fair bit of traction. And of course, the earnings, the last of the earnings reaction in that sense will also be in focus. Muthoot Finance, perhaps, there's AB Fashion, and a few others as well. But the first trade's coming up, I mean, right into the resistance of 21,900, right there at the open. So, that's the last retracement of the fall, and we have opened exactly there. So you've got the Nifty Bank, which is also starting about 60 points higher, make it 45 now. So we're at about, 45,900. Okay, we had a 50-60 point higher start. It's gone absolutely flat, almost immediately. The Nifty, though, is holding just under the 21,900 mark. Sonia's walked across to the wall. She's got more rates. Sonia.
Well, thanks a lot for that. So, I want to start off with some of the stocks, right, which have been in focus. So the Nifty is holding up almost about 0.2%. But yesterday, if you saw Reliance and stocks like SBI have seen large delivery-based buying. So let's take a look at Reliance. Another about in the green, SBI also a tad bit in the green. In fact, for SBI, Motilal Oswal had put out a report where they have a target price of 860 on SBI. They say the earnings momentum is something that can continue. By the way, 2% equity has changed hands on Vedanta. So do take a look at that. The stock is now down almost about 3% odd. And a couple of other stocks that we're looking at this morning. Glenmark saw big losses in this quarter. A loss of 350 crores is what Glenmark has reported. Revenues are down 28%. The stock is up almost about 2.5%. Maybe price that in. Muthoot Finance, strong set of numbers coming in over there. AUM growth of 23%. The earnings beat street estimates. So Muthoot Finance looking pretty good. M&M, I would like to see how that one is reacting. Remember, the company has scaled down its tractor guidance, but overall numbers are stable. And most brokerages have a stable view on that. In fact, CLSA has raised their target price to 2,074 on M&M, and they say it's a strong growth in the SUV segment that M&M has seen. Apart from that, a couple of other stocks like Zomato also continue to be on our radar, so keep an eye out on that. And some of the other names reacting to their numbers as well. You have, NMDC continues to see traction there. It's almost a 5% rally on NMDC this morning, and volumes are also piling up on that name. So a lot of PSUs continue to be in action. Otherwise, the Nifty is looking pretty good, up about 63 odd points. The Nifty Bank also well in the green right now, 50 points higher. Let's see how it goes from here.
Well, from the broader market, Sonia, quite a few stocks actually are moving around. BEML Landwell, that stock is up closer on 5%. HPL Electric, that stock is up closer on 10%. So big move out there. Sutlej Textiles, we don't talk about this very often, but that one as well is coming as one of the top movers on the upside. So that stock is up and about. IRIDA, yesterday it moved up close to 5% in the final hour of trade. Well, that stock today as well is building onto those gains. Genesis, those numbers look very, very good. I recall the management coming on the show and in fact saying that there is big potential. Appears finally they're delivering because it's been a rank underperformer otherwise. So that stock is up and about in trade. Paytm, as you mentioned, is still down close to around 5%. Dhanlaxmi Bank is up close to 5%, one of the top volume movers. And NMDC, numbers look good. Stock has come off a little bit from the top, but the quarter 4 numbers will look far better. And finally, I think Suzlon is bucking the trend up and about yet again.
I mean, so yeah, things are sort of opening very, very vibrant in that sense, right out of the gates, as we have seen for the last many sessions now. So just holding at the opening level, which is the sort of 21,900 mark at this point in time. Let me just take a quick look at, a few other names. Maybe we could look at Muthoot Finance and how that one is starting. The Vedanta block deal, as Nimesh was highlighting in Street Chatter, that has gone through. 2.6% equity has changed hands, and that is worth about 2,600 crores. I think it the stock started about 3.5% lower, but it's basically picked up from there. Yesterday, there was some news on the Supreme Court observations as far as the Tuticorin copper smelting plant is concerned. I mean, that was the margin positive. There is arguably, and we'll know more in a bit from now in terms of who the seller, etc. is, but this is fundraising. I mean, so things are moving for Vedanta. We'll have to make a determination, and if it really is meaningful, we had a bit of a inflection point there. So Vedanta in focus. Otherwise the market, I think, is just sort of holding on with some of these gains and moves that we have in our hands. So 60 points on the Nifty is what we have at about 21,900. Sonia.
There's another large trade actually that's taken place on Yes Bank. I'm not sure who's the parties, but Large trade, I think, closer on 2% equity. So just want to highlight that as well, Sonia.
Okay, so many other stocks, right, that are looking good. I mean, the Sensex is now up almost 200 odd points. It's very interesting what's happening with Glenmark. Despite the company reporting huge losses, revenue fall, etc., Glenmark is actually up 5% right now. So I think pharma in general has been a bit of a flavor for this market. IRDA is up almost about 5 odd percent. So some buying interest coming back there. Inox India is up about 4.5% at 1,090. So that stock also has been a very strong performer ever since its listing that came through.
All right, well, more stocks in terms of what's happening and moving around in just a bit from now. But Sandeep Tandon is our market master today. He's founder and chief investment officer at Quant Mutual Fund. And of course, he needs no introduction. He's a 30-year veteran in the markets. Has now, of course, built a mutual fund business, which is sizable over the last 3 years or so. AUM of almost 60,000 crores now. Sandeep, it's a pleasure having you with us here on CNBC-TV18. Thanks very much for your time. We spoke exactly a month back in an extensive way, but we just want to talk to you today about a few themes. First on the mind, of course, is what's happening in the entire PSU space, Sandeep. You've been an early backer of many PSU stocks, PSU banks, railways, defense, but you're also someone who's very nimble and fast in moving in and out of things. You have a new PSU fund. The NFO, I think, is closing today for subscription. So just talk to us about your thinking in this space and, what are the top bets where you are live with positions in the PSU space, because it's a wide area with lots of sort of sectors and exposures. Go on. Sandeep, you'll have to unmute yourself, please.
Yeah, Prashant, my mistake. Okay. So, Prashant, as I have explained you earlier, that I'm bullish for a decadal call for the value as a thesis. Okay. And PSU obviously theme fits the bill for that. Okay. Now, let's look at something has changed, that I've been talking about for a while. Okay. And market is not willing to accept that change, and it is a very human phenomena. Because something which has not performed for nearly 2 decades, okay, or last 15 years, something has not delivered, and last 10, 12 months, they give a decisive move. So people talk about is just catching up. So the mistake which people make, whether this is just a pullback sort of thing or catching up trade, or this is something has changed. We believe that something has changed from India perspective. And given the scale and size the PSU companies have, I think it's a very meaningful change which is happening. Look at from the governance perspective, the governance levels are far, far superior which had in these companies. If you look at the capital allocation, which has been a very biggest concern in the public sector stocks for a while and is there for many decades. And a lot of people have worried about the political aspect also, if the misuse happen. Okay. Now you look at in last 10 years or last 5 years and last 3 years particularly. Okay. I'm observing these things. Initially, we also thought, so let's play this as a value thesis because it fits the bill. It's a part of value. Then in last 6 months, we realized that something radically has changed the way we look at PSU. Multiple data points when we look from our perception analytics are endorsing that this move is not a very short-lived or medium-term view. This move have more legs, okay? And it could be a decisive move from a longer-term perspective. That's the way we thought of launching the PSU. For a lot of people have raised this point. They have already rallied. Now you're launching, so you're known for market timing. So whether are we coming at the peak of the cycle? We got such mails from retail investors, distributors, okay? The only point I say is if something big is change or is changing, and if we are able to identify that big change, then I will like to participate in that big up move rather than saying that this could be a temporary or medium-term top. But I always say that if you are in a decisive bull run, which is the case in value as a thesis or PSU as a thesis, then definitely no moves will going to be linear. You will see sharp correction and sharp pullbacks, okay, and which we have saw very recently because yes, they were overheated. Some of the junk also within PSU basket has rallied significantly. So it's a bound to have those healthy correction, and again they have come back. So let's look at purely from a behavior perspective. Majority of the market participants still deny this thing, okay. For them, PSU is a negative territory list. They don't participate. They have not participated for decades. So why suddenly they will have to change their mindset? That's point number one. And second thing, even somebody participates, okay, because people participate the compulsion of underperformance. Just to avoid underperformance, people participate because it tests their patience. And when any reaction happens, the then these people react first, because it is like, for us, it's a erosion in the profits because we are very early. But if somebody has bought at the peak of the cycle, or when they're moving up now, buying and participating now, it's a loss in their capital. So the treatment is very different. For us, is a loss in the profit, and for somebody is a loss in the
Got it.
capital. Then he or her reaction will be very different. So largely, I think it's a thesis which I believe has more legs.
Okay, so
Sandeep, just sorry. But you have a fund now. So you're basically saying that you're collecting money and you're saying, I'm going to buy PSU stocks here from where they are and make money for you, right? So that's what
Yeah,
you're
that's
saying
correct.
with that fund. So hence the question, where will you make the maximum money in this space now, PSU space?
So I tell you, our focus will be the large PSU companies, okay? Because we have seen extraordinary euphoria or hype getting built around low float companies or smaller companies, where the moves have been very, very ridiculous, if I have to say that. But our focus will be the large PSU. I think they are still relatively very cheap. Relative, I'm again using the word, if you look at an absolute basis, they also have multiplied. But relative to the market, relative to the benchmark, relative to the particular sector, they are still very attractive. So larger PSU themes, whether you talk about OMC, whether you talk about metals, whether you talk about mining, okay, whether you talk about PSU banks, those are the areas which we look at, including railways also. So it's a theme which you have to play, but we like to play a bigger theme, bigger companies, bigger large market cap companies, rather than buying for a very low float companies.
Okay, so you said OMCs, metal, mining and PSU banks, the larger names in that PSU basket. The two other pockets, one you briefly discussed, defense and railways, right? You've seen massive moves here. Do you think if someone's missed the bus in these two spaces, is it still not too late to get in?
See, if you really ask me, defense as a theme and railway also, if you really talk about, for us, manufacturing is a larger thesis. This is a decadal call for a manufacturing thing, and obviously defense fits the bill perfectly. But the challenge is that they have rallied a lot. Okay, earnings are yet to come. All these companies have rallied purely on the order book position. So we have to understand up to what extent the upside is priced in, or up to what extent is spending. My personal assessment is that up to large extent is being priced in, and hence they will also move, but that ferocious move we have seen will not be there. So maybe they will stagnate, consolidate when we wait for earnings. So I'm not saying that they will fall and correct sharply. Okay, smaller correction or brief correction, what we saw recently, can happen, but the upside could get capped in these names. Okay, where the larger thesis of PSU which you're talking about, which is still a very attractive, where fairly liquid names, those are the names I think money will shift. And I always believe that this year retail participation is good and will remain equally strong. What I expect that FDI and FPI could be record participation come in the 2024 calendar year 2024 I'm talking about, because we have seen the signs of nervous global investor who has participated in China, not made money. So there's urgency to shift money. And that's the reason whenever fall will happen very sharp, you will see a lot of money will be attracted towards Indian markets.
Okay, all right. Hi, Sandeep. Good to see you. And Sandeep, just hold on to that thought. Just want to highlight what's being flashed at the bottom of your screen. You have Muthoot Finance. They mentioned in their con call that they're trimming back the guidance. I think earlier they were talking about 15 to around 20%, and now they are putting it at around 15%. So because of that, I think the stock, after opening up well in the green, it's come off a little bit. Currently, it's moving to the low point of the day. There's a guidance cut with regard to their loan growth forecast that they had given earlier. So it explains why that stock has come up. But Sandeep, good to have you on the show. And, something that the street has really been focusing is on how you've got into these PSU metal stocks at the right time. You have got into some of these at a third of their prices. But at current reckoning, how do you, justify that? I'm talking about stocks like Hindustan Copper, Nalco. They're still trading at very, very hefty valuations. So you got in early, but at current reckoning, do you still think that they're a buy?
We are holding Hindustan Copper for nearly 3 years now. Okay, and obviously we have added even last year also. See, Nigel, the point which I want to highlight that we are a macro house and we were able to spot that trend very early. So right from beginning 2023, I have been talking about metals as a theme. If you go back and 1 year back also in our portfolio, you realize we have built a very large exposure. And every forum I have talked about, don't start linking metals as a sentiment linkages with the China market or the dollar index. Okay, and this is the mistake which a lot of people did. Okay, by looking at the China is not going anywhere, dollar is appreciated, they missed out this move. Okay, those correlations, to be candid with you, in a very dynamic world are not very acceptable now. It's changing very fast. So this myths a lot of people have with the inverse correlation with the dollar index and the commodity price, those has collapsed long back. So if you are able to dissect that and then move on, look at the move which is there in the PSU or the metal basket. Most of the stocks are trading a lifetime high. Okay, where the perception for China or the DXY has not changed a lot even in the last 1 year. So it's an India-centric story, demand-centric story, and even we have a much larger thesis for mining as a theme for 2024. It's not only for India. We believe globally, okay, mining stocks will do very well, including countries like Australia should do very well, given the background they have not performed for the last many years. I think whether you talk about lithium related thing or Australian mining companies, coal company, I think this year, that's what our predictive analytic thesis is, that this year belongs to mining. And obviously, if you have a combination of PSU and mining, then becomes a deadly combination that PSUs are doing well, minings are doing well. PSU mining becomes by default the best choice. So it's a much larger call, much larger thesis. Global shortage, people are now talking about copper will be more visible in 2026-27. So it's a big call which we have taken much earlier, and like to ride, not getting upset what happened in very recently, where 2-3 days of sharp fall happened. Most of the metal stock corrected like between 15 to 20%. For us, like I said, it is a loss in the profit, not in the capital. So it's a very larger thesis call for us. We think still in the early stages.
Got it.
So I like to ride those things.
But now, Sandeep, just a couple of points. I think it's important for retail viewers who are watching, and most of your investors are retail investors, a new mutual fund basically. So they follow you. But what you're saying is, you said in PSUs, early investors, I mean, like for example, you said you bought names like Hindustan Copper 3 years ago. Early investors, if stocks fall, and it's possible, you're risking profits. But new investors in many of these areas are risking capital when stocks fall. So that's an important kind of mindset to go in with, because stocks have done so well. Would you say that the PE re-rating is largely done, and now it's earnings have got to come? Is it broadly the way? One has to be much more discerning in that sense, Sandeep.
So two ways of looking at here. And let's say in this case, yes, P expansion has happened first, and then the earning expansion will be more visible. Then it's a like phase. So P expansion happened, earning happened, then P expansion further happened, and earning expansion further happened. So that's the way cycle gets built. Okay, in some of the companies, like look at the new age companies, when they came, there was only earning expansion. Frankly speaking, it was not earning itself; it was a more of a price to sales multiple expansion which happened. And when they corrected that multiple deterioration happened first, and earning has started coming in right now, but P deterioration or the multiple deterioration was very meaningful. So I think in this case, when you talk about PSU as a theme, I think it's a combination. P has already expanded. Yes, I agree.
But
it has expanded up to that extent. Compared to private sector or compared to the benchmark, answer is big no. Now a lot of people believe that they will trade at significantly discount, which I disagree. Yes, they will trade discount to the best global names or the private sector names, but they will not trade at significant discount. So that you have to understand the multiple expansion, particularly in large PSU stocks will happen further even.
We've had many of these. You're a contrarian investor. You look at sentiment as an important input when you make decisions. You don't own any HDFC Bank. Has sentiment bottomed? I mean, at least one piece maybe. And what's the thought process? Briefly, Sandeep.
So if you generally look at we have been very cautious on the private sector banks for a while. I don't think we own any of the large private sector bank in our portfolio. So if you look at like purely from a valuation perspective, yes, they have been very attractive, but again, that is also very subjective, whether this multiples can last for longer term perspective when your earning deterioration is happening, okay? Particularly the credit growth is also not coming up to that extent. So our view is that if you ask me whether these stocks have hit the most neglected zone, hated zone, the answer is big no. They have not reached. Now, question comes, if you are in a decisive bull market, whether you will reach in this cycle or not, that becomes a big question mark for us. And that is something we are watching very closely. For us to go all out and say, yes, this is the time, like the way we did in pharma, the way we did in PSU or metal, I don't think that time has still come. And that's the reason we're happy to hold PSU banks over private sector banks in our portfolio.
Okay, I remember that conversation we had, right, on our Smart Money show a couple of months ago, where you said that, find these companies that are in the neglected, hated zone and are still doing quite well in terms of earnings, etc., and lap them up. You also have a big exposure to Reliance as well as, the whole telecom basket, to Jio particularly. I wanted your thoughts on Reliance because it's now sort of emerged as a leader in this market uptrend. Do you think there's lots more to go on the upside, and what do you think are the triggers that is driving this stock?
So, Sonia, let me explain Reliance in a detail. If you recollect till 2019, Reliance was slightly neglected, and we have been bullish actually from 2015. We talked about. So when a lot of news-driven, event-driven action happens, so Reliance started trading by, like, if I am to say that by September 2020. They started hitting the most admired territory after 5 years. So a lot of news driven, lot of participation happened, and that's the time we actually exited. But if you really look last few months in mid of 2023 onwards, we have started building exposure. So I will not say that Reliance hit the extreme hated zone, but it started trading in the neglected zone after massive euphoria, which we saw in 2020. And since then, we have seen some amount of consolidation happening. People have started giving up because stocks were started underperforming. Now, our thesis is that if you give valuation for renewable energy in a different manner, or the new age energy company, which Reliance is getting into it. You talk about retail, some of the retail companies quote at absurd multiple. When you talk about, you leave this telecom also, most of the companies are in a most admired territory. So if I look at O2C, if you leave it, your market may not like to give that much value, but ultimately generate huge cash flow, which support other businesses. So if you look at in totality, if I look at the summer part valuation relative to now in absolute terms, you can say anything, but in relative to market, how other companies are treated, we felt this company was grossly underpriced at the price which we started participating. I think it has still potential. If we have taken a 10% bet in our portfolio, that's the maximum which I go. So most of the portfolio is 9.9% Reliance in our portfolio, which a clear indication is not a contra call, it's a data-driven call, and with the conviction that has a potential to participate. As far as Jio is concerned, that's a very different call for us. As I said that we have been talking about that leverage economy as a concept, relevance will decline. And with that background, we believe that banks are the biggest beneficiary of leverage economy as a concept. I think something is changing in the banking globally. Banks will not exist in this form in the next few decades. And we are getting early signs of deterioration. And that's the reason Jio is is a publicly disclosed information. We own a large chunk of our portfolio. Okay.
Sandeep, I had 30, sorry to interrupt. Yeah, sorry to interrupt. I want to squeeze in, so maybe just a 30-second response. Have you looked at Paytm?
Yeah.
Just off that, somebody I was talking to was saying the Jio Financial market cap is 1,80,000. Paytm now is 20,000 crores. Have you looked at Paytm at all? No.
No, initially we didn't participate when the IPO happened. We recently, a few months back, we did participate and we exited also. The challenge with the Paytm is that right now, obviously, it has unknown risk which has hit them. Okay. But I have to look at if you ask me Paytm as a concept, yes, I don't find too much problems at the current levels, but there's a regulatory risk which is there. Okay. And this is the stock which is grossly over-owned by private equity. So, and they are exiting at every level. So that's the supply keeps on happening in these stocks. But I think without commenting on individual name, I think as a concept of this whole space of payment gateway or digibank as a concept, because I believe digital banking will be the new reality much earlier than what people are thinking. And so Jio fits the bill from a larger thesis in that manner. So it's a much larger call. It's not a few quarters callers, or we are taking a strategic call in that company from a longer term. That's the reason we sold all the NBFC and converted into GEOF in our portfolio.
All right, Sandeep, we'll leave it there. Thank you very much for joining us. It's a pleasure. Great conversation as always here on CNBC TV18. Thank you very much. Hope to have you back soon again. Just a quick look at the market, which has, by the way, cooled off. The Nifty has just got about 10 points. I mean, it's down 10 points from being up about 60, 70. And that's what we were talking about in the morning. The GIFT Nifty and the Open, etc. is fine, but it's got to be sustained. And that, at least, we're not very sure. It's not clear whether, that 1% pop that we saw overnight, it's got the basis for a bigger build out here. A few names, by the way. Market breadth is strong, 3:1. Over 3:1 is what we have in terms of advanced decline ratio. 1,600 stocks are higher and about 500 stocks are lower. The big movers right now, maybe just a quick look. NMDC is the top one, is up another 5% right now, 247, almost 250 now on NMDC. MRPL is up 8.5. MRPL and Chennai Petro both were some of the biggest gainers that we had yesterday. CPCL and MRPL. In National Fertilizer, NFL, that's up about 12% right now. Inox India, we should put up huge volumes. Yesterday ended 10% higher. It's up another 8% this morning. So these are where the momentum is kind of in. Torrent Power is up 6.5%, 1,200 plus on Torrent Power. You've got Irida, which is up about 5% right now. Tourism Finance Corporation, one-way kind of a move, sharp correction. That's coming up on the screen with large volumes right now with a 5% gain. And there is stuff like, I think fertilizer is a theme, right? I mentioned NFL, but look at RCF as well. And FACT is up. So maybe keep an eye out on that particular space. Usually moves higher together. Jubilant Industries, Jubilant Pharma are some of the other 5-6% kind of gainers that we have on our hands at this point in time. So yeah, lots happening. Nigel.
Just want to highlight a few more stocks. Glenmark Pharma started off well in the red. That's recovered all of its losses. It's moved into the green. That's a 5% recovery from the day's low. And Muthoot Finance, the stock opened gap up. No problem with the numbers. The problem was they went ahead and they cut their guidance, as Abhishek, my colleague, had told us, and we had flashed that for you on the screen. Because of the trimming down of guidance, that stock has come off close to around 4% from the high point of the day. And Aditya Birla Fashion as well is seeing a bit of a knock. The other one that's moving well from the F&O basket is Torrent Power, flying away, up 6% as we speak. And a couple of other names like Genus Power. Yesterday it was down 10%. The street didn't like its numbers. Today it's trying to pull back some of that, up close to around 2%. Sonia?
Okay, just a couple of more stocks, right? The biggest Nifty gainer right now is M&M. So the stock is up almost about 4% and brokerages continue to be bullish on M&M post the results yesterday. So 4% rally there. CLSA has actually raised its target price to 2,074. Nomura is one of the most bullish on the street at 2143 and HSBC is at 1900. Of course, there are some concerns. M&M has gone ahead and lowered their FY24 tractor volume growth guidance from flat to -5%. Also, the SUV order book has fallen sharply, and that is one big concern that the street has. The order book is down about 21% year on year. So two factors, right? Extended El Nino in 2025 and perhaps a slowdown in SUV demand are some concerns. But for now, the street is looking forward and the stock is up almost about 4%. In fact, my colleague Parikshit is in conversation with Anish Shah, the MD and CEO at M&M. So let's cut across to that conversation.
Well, the Mahindra Group has announced its Q3 results with consolidated revenue coming in at 35,299 crore, up 15%, and profit after tax up 34% at 2,658 crore. The company has seen strong performance across businesses except for Tech Mahindra. The management says that financial services business continues to deliver strong performance and the company's growth gems are well on track to achieve 5x growth. Let me go across to the MD and CEO of Mahindra Group, Anish Shah. Mr. Shah, let me begin with the auto business. Q3 volumes coming in at around 211,000, up 20%. Highest ever utility vehicle volumes at 119,000. But the order book has fallen sharply quarter on quarter. This has been a big concern. Going forward, what kind of demand momentum do you see?
Parikshit, good morning. And we are very happy about the results this quarter. With regard to the order book specifically, this is a positive actually. First, in December, we always prune down the order book. This is something that is a regular feature in the auto industry. And second is that because we've been able to increase capacity, that has brought the order book down. In fact, our goal is to bring it down even further so that we can bring down wait times. One of the biggest challenges we face today is that consumers have to wait a long time for our vehicles. That has come down with the order book coming down and with our capacities going up, and that will come down even further. So that will enable consumers to get cars faster. We're seeing very good demand for them. We're seeing very good growth numbers, and therefore the focus for us is really to drive growth, to be able to deliver the vehicles to the consumer on a timely basis, and therefore have a manageable order book.
Right. Now, speaking about the market share in the auto business, though you're not in the CNG segment, entry-level cars or sedans, but the market share has been around 9 to 10% for several months now. How do you plan to increase the market share here onwards, and what will be the pillars of this strategy?
So for us in the SUV segment, the market share is 21%, even though we don't play in all the segments of SUV. And we're number one from a revenue standpoint. So we're the largest SUV maker in India today. In addition to that, as we look at LCVs, we have a 49.6% market share. And that has been steadily increasing over the last few quarters as well. So we are playing in the segments that we want to. And we feel that we can have very strong differentiated products in these segments.
Just speaking about the farm business, it has been under stress. The farm equipment sector margins have been down 80 basis points. The revenue has been flat as well. The guidance on the tractor business is also not positive at this juncture. Give us a sense of the stress that you see in the farm equipment segment, the tractor segment, and your outlook for the coming quarters.
So there has been a lot, Parashit talked about rural distress, but we are not really looking at it as distress. If you look at it over a slightly longer time period, just over the last 3 to 4 years, the year immediately after COVID, the tractor market grew 27%. So if you look at the average growth over that 3 to 4 year time period, it's fairly reasonable. This year is going to be, in our view, negative 5%, but that also is a function of some of the festivals and Navratras coming around March and April are impacting it by a few percentage points. And overall, yes, this is a slightly slower period in the farm business for us, but it's something that really doesn't concern us. Margins for this quarter, as we explained yesterday, have been impacted by a certain one-time impact, but margins have been again fairly good and steady for us. And it's one business where we have seen in the past cyclicality. This is part of a cyclical downturn in a sense, but this cyclical downturn is far lower than what we've seen in the past.
Right. The farm business is currently generating an EBITDA loss of 20 to 30% according to certain reports. When do you expect overall farm business margins to return to normalcy, and when do you see improved operating performance?
So the farm business margins are not that far from normal. If we look at a margin trend, they have gone up a lot. And what we have also shown in our analyst meeting yesterday is, despite some of the volatility we see in the industry over the past many years, we've been able to keep farm margin fairly consistent. So we are just probably about 50, 70 basis points away from our normal. And that's not that far a gap. In fact, we should be able to increase it as we go forward as well.
Right. Now, speaking about the demand for automobiles, coming back to the SUVs once again, what kind of demand do you expect in rural versus urban? And do you see a moderation in demand for SUVs? Are you seeing some sort of a moderation in demand overall across the industry?
We have not seen much moderation, which is, I guess, a function of the models we have and the strength of those models. We do keep hearing about moderation across certain parts of the economy, but we haven't really seen that. So, as I say, for us, we're not really seeing anything around rural distress or anything in that sort. We are seeing a fairly reasonable market overall.
Right. Now, coming back to the regulatory ecosystem, this is also a year, this calendar year, when you're really going to push ahead with your electric vehicle strategy, the Born EV strategy, and you also told us in previous interviews that you may bring an EV to the market, another EV to the market earlier than expected. But looking at the changes in the ecosystem which are being discussed right now, the government is keen to have the likes of Tesla, VinFast here. There is a new EV manufacturing policy that is being discussed, essentially giving duty concessions to companies who commit to manufacturing in India in a 2 to 3 year time frame. What would be your view on this?
So, Parikshit, our message to these companies is, if you believe in India, then make in India. It's not fair to consumers if companies just import from outside without a commitment to the market, especially in the auto industry, where the consumer would look for a commitment that the company is going to be with them for a long term, for the duration that they have the car. India today also is in a very strong position globally. And we've got a very strong focus on Make in India. And that really should be the path forward for us as we go towards a much stronger economy. We've got a large number of foreign makers in India. The auto industry has been a very competitive one for the last 20, 25 years. And at Mahindra, we've actually benefited from that competition. The cars that we make today are world class. The models that we've delivered over the last few years have been beating the others hands down. And as a result of that, we welcome competition. So we would welcome folks to come in India, but our basic message to everyone is, if you believe in India, then make in India.
Right. Now, if they are given duty concessions, how would this impact the local industry, companies like yours who have invested heavily in localization and capacity building over the last few years?
As I said, we compete very well, and our sense is that Make in India will prevail because that's really what the economy needs, and we shall see where that goes.
All right. Now, speaking about the uncertainty and future of FAME, if stopped right now or extended only for a 2 year period as being proposed by the Ministry of Heavy Industries currently, how will this impact the industry? Though we've not seen the final contours, there is only a proposal that has gone to the Finance Ministry and we're awaiting clarity.
So on that, we will have more details only when we have that clarity. So we'll wait for that and we can have a conversation at that point.
Right. Is hybrids a model that you would be considering as you focus heavily on EV transition?
So we are ready with hybrids. In fact, we had to make a choice whether we go ahead with hybrid or EV or both. And the choice we made was to go with EV because hybrid is really an extension of ICE. If we look at the benefits of hybrid, one, it has slightly higher fuel efficiency. Emissions are more or less the same, and the cost is higher. So hybrid doesn't really change the game as electric does. The EV ecosystem will have a significant change, a much better set of products, much lower operating cost. Emissions are close to zero or zero as such. And therefore, that's really going to be the path for the future. That requires some incentives which the government has put in because a number of things have to change for that. That will have some hiccups as we go on as well, as we've seen in economies around the world. But we also have seen economies where the EV share is 90% now. And therefore, that is the future for us. And that's what we feel is the right place to go to.
Right.
So that's been our plan so far. If consumers want hybrid, we will give them hybrid. But for us, that's really an extension of ICE.
All right. Now, speaking about Tech Mahindra, what is the company doing in terms of review of operations? What measures will this entail to ensure growth? The company has reported a 60.6% year-on-year drop in net profit at 510 crore for Q3.
So Tech Mahindra is really going through a reset here because a number of things have to change. We have a new CEO, a new Chief Operating Officer. There's been a very significant revamp in the organization structure to focus on core operations as a key strength that the company needs to build. It's always been very strong from a customer standpoint, and the operating strength will add to it. So the path forward for Tech Mahindra is really to excel and perform ahead of its peers And that is a path that we are on right now. I call it a turnaround path, similar to what we did for Mahindra Finance, which we started about a year and a half ago. And that is working very well. Tech Mahindra, with the new team in place, we have all the confidence that that team is going to deliver on that turnaround path that's set out for them.
And finally, any possibility of reducing the workforce? When do you expect to return to profitability for TechM?
TechM is profitable already. It's just a question of profit growth. And that is something that we expect starting the immediate fiscal year in any case. So it's about strong execution on TechM. It's actually a company that has been built well, that has a tremendous amount of strengths. And as we've gone through what I call a reset here, it's really to make the company stronger.
All right. Thank you very much, Mr. Shah, for joining us on the program. And with that, it's back to Sonia and our markets team in the studio.
All right. Thanks a lot, Parikshit, for that. Well, for the market, it's absolutely flat. But what we do understand is that the mid-cap index is picking up a lot of pace. So the mid-cap index is now up 350 odd points. A lot of big movers. MRPL is up almost about 11%, and big PSU banks moving around this time. So SBI is, of course, in the green, but you have other PSUs like BPCL, which is up 3%. Coal India is up 2.5%. HPCL is up 4%. So oil marketing companies are on an upswing. Let's do one thing. Let's take a quick break. On the other side of the break, KP Mahadevaswan of NBCC will be joining in for their Q3 earnings. Stay tuned. Welcome back. This is Corporate Radar on CNBC-TV18. Well, let's do one thing. Let's talk about some numbers now. NBCC, it was a steady quarterly performance for the company with a healthy growth in profits and revenues, while their margins also expanded. KP Mahadevaswan, who is the Chairman and Managing Director at NBCC, joins us now to talk more about that. Mr. Mahadevaswan, thank you so much for joining us. It was a decent quarter for you. Revenue growth of 13%. The EBITDA has gone up almost 23% this time. You have put a guidance of FY24 revenues to be at 11,000 crores. Can you just tell us whether you are on track to achieve that guidance, and what kind of execution are we looking at in Q4? And also for FY25, what kind of revenue guidance would you put out?
Good morning, Sonia. For 25, our guidance is around 13,000 crore rupees. For 23-24, we'll definitely cross more than 10,000 crores. So we have already achieved 6,300 crore up to December third quarter. So we will definitely achieve another 4,000 crore rupees during this last quarter.
Okay. All right. Hi, sir. Good morning. Nigel on this side, and good to see you. So this year it will be around 10,000 crores, a little lower than the 11,000 crores that you were guiding for in the past. Could you tell us on the operational margins front, what are you looking at? I think earlier you were talking about roughly around 6.5% of margins and PAT of around 5%. So for this year, you'll do around 650 crores of EBITDA with PAT of around 500 crores. Just want some clarity, sir.
Yes, definitely. 10,000, I am saying minimum 10,000, but definitely we will achieve 10,500 crore. So the profit margin also, it will be increased. PAT will be, currently we are more than 5.5%. Yes, of course, last quarter is there. Last quarter is crucial for us. Definitely we will going to achieve this PAT margin or even EBITDA margin also.
So 500 crores and 650 crores is going to be achieved this year, right?
Yes.
Okay, sorry, just to revise the numbers, what you're saying, 11,000 crores in revenues this year, right? That's
Yes.
Or 10,000 crores.
10,500 to 11,000 in between. 10,500 definitely. Because what happened, actually we are targeting 11,000 crores due to graph, imposition of graph in Delhi. We are doing 7 GPRA and Amrapali projects. Delhi actually lot of issues are there. One is pollution, other one is the farmer strikes. With the farmer strike and graph, I don't know. That is the reason I think we are going to reduce our target. But anyhow, we will cross more than 10,000 crores.
And are you putting out a guidance for FY25 right now?
13,000, more than 13,000.
More than 13,000 crores in revenues. And,
Yes.
and margins?
Margin around 600 crores, more than 600, 700 crores.
Okay.
So can you tell us a little bit about the real estate business as well? Because over there, your revenues have fallen by 11%. You're sitting on a base of around, I mean, it's a very, very small part of your overall business, but just want to understand, do you expect to see more pressure there?
Yes, ma'am. The real estate, Sonia, we are going to start two new projects, one in Jaipur and one in Coimbatore. So, and already we have some real estate project that we are going to sell. So after selling only, we will book our turnover. That is the reason. So that once you have to give the handed over to them, then only you can book the turnover. That is where we are dropping. But in the last quarter, we are going to achieve the real estate also.
But do you have any number in mind? 100 crore quarterly revenue run rate? Anything that you're looking at?
I think 125 crore for in the next quarter, this quarter, coming quarter.
Okay, so, you know, in the near term, maybe this number will be 10.5, 11,000, 13,000 crores, that's fine. But I think for the next 5 years, the outlook is you're going to do revenues of close to around 25,000 crores?
Yes,
is that correct?
Yes. Next 5 years, 25,000 crore.
25,000 crores in the next 5 years with margins of around 5%. So you'll be doing 1,250 crores with a 5-year horizon. I think you've given that number in the past.
I have given 1,250, but we will achieve more than 1,250. It will be, I think, around 2,000 crores because we are starting our real estate projects, wherein we will get the profit of around 25 to 30% profit. Whereas in PMC, we will get 6 to 7%. So after next 5 years, our profit will be around 2,000 crores.
Okay, my only problem is, sir, the work on ground currently, I understand, is around 20,000 crores, right? That is currently underway on ground. But for you to get to this number of this, 25,000 crores, you should be having some visibility, maybe of around 75,000 crores. Tell us more about that. How do you manage to achieve this?
Currently, we have a work order of around 55,000 crores. And we will, during this year, we secured 10,000 crore work order already in the last 10 months. Another 2 months we have, and in the 2 months, we will going to get at least minimum 10,000 crores. So the business, we are securing more than 20,000 crores in a year. So definitely the target, whatever we are setting, it will easily achievable.
So I was talking about work on ground, not on the order book, but you're sounding confident that you're going to achieve that. So we'll take that. Yes, please go ahead.
Yes. Definitely we'll achieve.
Right.
During this year, we already awarded 6,000 crore work order in 7 GPRA due to some issues because it is a self-sustainable mode project. We have to earn the revenue. We have to generate our revenue, then only we can spend. So presently, we have sold almost 10,000 crore work in Naroji Nagar. So we have sufficient money and we have clearances also. So during next years, it will be through.
Right. So margins, you said 600 crores EBITDA, 13,000 crore revenue in FY25. That's about 4.6% in margin. Would that be correct?
No. I told 2,000 crores. I think 2,000, at least 2,000 crore profit will be there. PAT will be 2,000 crore.
No, I'm talking about EBITDA, sir. Operating profit. You said 600 crores, right? No, sorry, net profit, you're saying 2,000.
Net
sorry,
PAT,
could
I'm
you
saying.
just...
I am saying PAT.
PAT of 2,000 crores in what year?
Next 5 years.
No, okay, fair enough. No, that's what I'm asking you. I'm saying for you gave us a number for FY25. You said 13,000 crores in revenues and operating profits of 600 crores. So that's a margin of 4.6%. So
I'm saying PAT, not EBITDA.
PAT of 600 crores in FY25. Okay.
Yes.
I get that. Now I get that. Fair enough. I think we'll have to wrap this up. Thank you very much for joining us. Good speaking with you, sir. And it's a pleasure having you here with us. We'll talk about sort of, more stuff on the markets in a bit from now. but 15 points lower on the Nifty. So now, in the index really not going anywhere at all. Paytm is the top volume traded loser right now. It's down 4.5%. Stocks at about 327. From the day that the RBI sort of directive came, the stock basically, actually even as of yesterday, the stock halved from levels. It was already down quite a bit from the time that the IPO came, but even then from the RBI circular data, it's halved. Narayana Hrudayalaya, we put out numbers earlier, 4.6% lower, 1352 is where that one is trading at. That's a sharp cut. Max Health, another hospital company, is down about 2%, 867 or so coming in there. Taj GVK, absolute high flyer, that's also pulling back a little bit. It's down about 2.5%, 347 on that. We'll take a quick commercial break here. Manisha will be with us, and we put the focus on commodities in just a bit from now.